Hello investors and future investors, welcome to the channel. On today's video, I will show you the Iron Condor option strategy and how you can use it if you're trading with a small account. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button, and consider subscribing while you're down there for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. The Iron Condor is a 4-leg option strategy that ideally is not suitable for new option traders. However, if you're trading with a small account, which most of the new traders are, then this is an awesome strategy to add to your portfolio. It is also a really cool name for an option strategy, Iron Condor. But enough of that, let's get into this video. For today's video, we're going to be performing the Iron Condor on American Airlines, ticker AAL. Now, what I'm going to do, I'm going to show you how quick and simple it is to do an Iron Condor. And afterwards, I'm going to explain the Iron Condor on all 4 legs. So let's jump into trade AAL options. Now, like I said, an Iron Condor, although it's a 4-leg option strategy, it's extremely simple to put on. So let's go to put and sell, and then we're going to choose our strike date just 1 week out, which is going to give us October 1st. Now we're going to go down below our strike price and we're going to choose our first call. Let's use the $19 one. Now we're going to go over to buy and put. We're going to choose a strike price right below $18.50. Now we're going to go to buy and call, and then we're going to choose our strike price now above the current share price. And that's going to give us the $21. Then we're going to go to sell and call. We're going to choose a strike price right below that one. That's going to give us the $20.50. And voila, there you have it, Iron Condor. So 4 legs, 1, 2, 3, 4. Now I'm going to go through it and explain it to you in detail. So let's go ahead back to American Airlines. And then we're going to go back into the American Airlines option chain once again. Now, when I am doing an Iron Condor, what I first like to do is put on my put credit spread. The Iron Condor is made up of 2 separate option strategies, namely the put credit spread and also the call credit spread. So I like to start off with the put credit spread. So now we're going to go to put and sell, and we're going to choose our strike price below the current share price. Now I'm going to choose the $19 call. Now the reason I'm choosing the $19 call because it gives me a 75% chance of profitability or higher. Now for selling this put, I'm going to receive 0.16 or $16. As you well know, each option contract is multiplied by 100 shares. So now we're going to go over to buy and put, and we're going to choose the strike price directly below our sell put, which is going to give us 18.5. Now for that 18.5, since it's we buy now, we're going to have to pay 0.09 or $9. We're going to go ahead, we're going to click that. Now this is the important thing that I really want you to see. It says here, put credit spread. So for the put credit spread, you're going to be receiving a credit. Now that credit is yours no matter how this trade goes. Now, this is the first part of the Iron Condor. So once again, we're going to go back into the American Airlines option chain. Now we're going to go over the second strategy, which is the call credit spread, which is the second part of the Iron Condor. So let's go just 1 week out. And now we're going to choose our strike price at $21. We're going to go ahead and hit that. And once again, we're buying, so we have to pay 0.21. Then we're going to go over to sell and call, and we're going to choose the strike price right below our buy call, which is going to give us 20.5. Now for that 20.5, we're selling in this instance. So now we're going to receive 0.35 or $35. We're going to go ahead, we're going to hit that, and voila, here you see it. Call credit spread. Now for the call credit spread, you're also going to receive a credit into your buying power. So like I said, the Iron Condor consists of a put credit spread and a call credit spread. So once you're able to master these 2 strategies, then it's extremely simple for you to put them together, which is going to create your Iron Condor. Now let's go ahead. We're going to put an Iron Condor, and I'll explain to you why you'd want to use an Iron Condor if you're trading with a small account and some of the benefits of the Iron Condor. So once again, we're going to go back to the American Airlines option chain. Okay, so once again, we're back on the American Airlines option chain. We already have our sell put. Like I said, I prefer to do the put credit spread part of my Iron Condor before I do the call credit spread. We already chosen our strike date, which is going to be October 1st. So let's go ahead again. We're going to put the put credit spread together and also the call credit spread. So now you're going to choose your strike price. Now your strike price is based on your risk tolerance or whatever you could afford. I like a chance around 75% or higher. That's why I come up with the $19 strike price. So let's go ahead. We're going to go ahead and we're going to click that. Now we're going to go ahead. We're going to go to our buy and puts, and we're going to choose the one right below 1850. We're going to go ahead. We're going to click that. Now we're going to jump over to our call side of the Iron Condor. Let's go buy and call. And then now we're going to choose the strike price above the current share price. So now we're going to go ahead with the $21 strike price. And then we're going to flip over right now to sell and call. And now we're going to go with the strike price right below the 21, which is going to be 2050. We're going to go ahead and we're going to hit that. Voila. Once again, you have Iron Condor. So once you do this Iron Condor, right away, you're going to receive 0.25 or $25 minimum credit into your buying power. Now that money is yours to keep no matter how this trade goes. So in order for you to perform an Iron Condor, you must leave a collateral. So let's go ahead to continue. We're going to choose the amount of contracts. Let's go with 1 and let's hit review once again. Now, like I said, in order for you to perform an Iron Condor, you must leave a collateral. Now that collateral is going to be $50. Now look at it this way. If you receive a minimum credit of $25 and you leave a collateral of $50, ideally what you're doing, you're risking $25 to make $25. Now the order summary, all the order summary does, it just tells you what you did in order to enter into this contract. So sell to open, buy to open, buy to open, and sell to open. Now do not let this part confuse you. It's like I said, this is extremely easy to do once you master the put credit spread and also the call credit spread. So how do you win with an Iron Condor? Well, let's jump back into it. Ideally, when expiration comes around on October 1st, what you want American Airlines to be trading below your 20.5 call, and you want it to be trading above your $19 call. Any price between that, you're going to receive your full minimum credit. Like I said, that's yours no matter how this trade goes, but then you're going to be receiving your maximum collateral back. Now, if on expiration at October 21st, American Airlines is trading between 20.5 and 21 or 19 and 18.5, then you will get some of your collateral released back to you. So as a small account holder, why do you want to use an Iron Condor? Well, the number one reason is the low cost of entry. In order for you to enter this Iron Condor, it's only $50. In order for you to do most of the other strategies, your account needs to have upwards of thousands of dollars. So the barrier to entry is really, really low for the Iron Condor. The second reason you want to use the Iron Condor as a new trader is because of premium. What better way to enter the option world than getting a premium as soon as you enter into a trade? When it comes to small account options, I would definitely recommend the Iron Condor for those of you with account balances or below 500. Now, if you want to scale up on your Iron Condor, all you need to do, you go right in here and you increase the amount of contracts, which I do not advise. Increase your contract as you will based on your portfolio value, your total portfolio value. Now, I did mention how you win the Iron Condor. Now let's go over how you lose the Iron Condor. It's going to be pretty straightforward and it's going to be the opposite of winning. So, in order to lose the Iron Condor on expiration at October 1st, American Airlines has to be traded above $21 or below 18.5. Once that happens, then, like I said, you keep your minimum credit, but then you lose your collateral. So your total amount lost is going to be your $50 minus the $25 you receive for putting on the trade. So your total loss is going to be $25. Hence, again, this is perfect for small account options. Now, we have lots more strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, please share this video with someone you think that can benefit from its content. Let's help as many as we can. Thanks for watching, and remember, always keep pushing your investments.